Hey, welcome everybody to the 40 Finance channel. My name is Jeff Beers. Today I'm just doing a quick recap of the Netflix third quarter earnings report that just came out a few minutes ago. This is one that I was very interested in, not necessarily because of Netflix itself, that I was worried that they weren't going to make money or something like that. The bigger thing that I wanted to get intuition on was just how was a streaming company doing during the summer quarters of this pandemic time that we're in. They had huge numbers in the first part of the year, which makes a ton of sense with people in the lockdown and whatever. But the lockdown has been over for some time. So, how has the business reacted? And perhaps most importantly, what does Netflix see for the rest of the year, because that's going to give us some insights on other stocks that we all follow. If you enjoy this kind of content, don't forget to give me a like and subscribe to the 40 Finance channel. Thank you to everyone who's supported the channel so far. All right, so here's the quick and dirty snapshot from Yahoo Finance. We just go right to that yellow box there. These are the main results. Q3 revenue, $6.44 billion versus $6.39. So they beat on the revenue numbers. Earnings per share, though, $1.74 versus $2.13 expected. So that's a 39-cent or so miss on earnings per share. And that's where you start to get into expenses and other fees that may impact the actual earnings per share. Then probably one of the biggest metrics to miss on was paid streaming subscriber additions. 2.2 million versus 3.3 million expected. Obviously, when you're running a service like Netflix's, new paid subscribers is a big metric, and it's one that we're going to be looking at closely across all of these earnings in the quarter, whether you're talking about a Salesforce or a Zoom, you name it. New paid subscribers is the bloodline for these companies, and that's what was interesting here for me personally from Netflix standpoint. If you go down that article just a little bit where I've highlighted some things, more than 10 million subscribers joined Netflix during the second quarter, and nearly 16 million paying users were brought on during the first quarter. So you had, basically 26 million additions in the first part of the year, and then you drop to 2.2 million for this Q3. New subscribers from the Asia Pacific region were the largest contributors to Netflix overall growth during the third quarter, comprising 46% of paid global net additions. That is actually a good metric, just because one of the knocks, I guess you would say, on Netflix is are they just American users only? How far can their subscription business actually go? It's good to see that 46% of the net new additions were actually from a different region. That's very healthy for international growth metrics. All right, now looking ahead a little bit, there was some good news, and this is the guidance going forward. So looking ahead, Netflix says that in Q4, it expects revenues of $6.57 billion, earnings per share of $1.35. The street had been looking for $6.58 billion, so just one notch less than that, but only 94 cents in EPS. So I haven't went through the whole report to see how that's been sort of manipulated, but it's interesting because the earnings per share were woefully short, so to speak, for this quarter. But now at the end of the year, the earnings per share are going to trump what the expectations were. So we'll take a look at that here in a second and how it looks across the full calendar year. Long story short, though, even though there was a miss kind of on expectations between new subscription ads and then, of course, EPS, there's some bright news here in Q4. So it's definitely not just a complete miserable earnings report by any stretch of the imagination. Okay, I shared this chart the other day when I was looking at the earnings week coming up. And this is basically Netflix earnings and EPS history. You can see I circled a couple of boxes last September here. They were at $1.47. At that time, it was a 41% surprise. Now, if you scroll your eyes down to the circle with $2.13 in it, that was the expectation heading into today's call. So I made a notation off to the side there that it actually came in at $1.73. If you keep going to the right, you see formerly on next quarter, analysts thought it would be 94 cents per share, but Netflix basically came out and said, actually, it's $1.35 is the way we see things. So there could be a little bit of expenses that may have moved forward somehow, some way. You basically lost 40 cents here in the third quarter from expectations. But in the fourth quarter, Netflix has come out and essentially added, roughly or 41 cents to the estimate, if I'm adding that up correctly. So they missed by 40 cents in the third quarter, but then on the same token, they're saying we'll be up 41 cents on expectations in the fourth quarter. So now where that leaves us is basically flat for the year, and it basically makes it pretty easy to gauge the EPS going forward. We kind of got 2 for 1 in this earnings call that it basically settles the EPS for the year. Granted, they still have to hit those numbers, and they could come up above or slightly below. But basically, from an EPS projection standpoint, we can feel pretty good on where Netflix stands today. All right, quick look at the stock here today. You see it's $4.97 after hours, so about a 5% hit on the mixed news that we have. And I was mentioning earlier before earnings that Netflix actually, compared to some of these other stocks that if you want to call them COVID stocks or whatever you want to say, was probably one that had the most valuation potential in terms of growth rate versus the price that it was trading at. And now that we know a little bit more about the EPS, I would say that sentiment holds true as well. So I would definitely continue to watch Netflix. I believe that their annual projected growth rate from a revenue standpoint is about 25% per year over the next 5 years. I reviewed it in one of my recent videos, but it's definitely double digits, healthy double digits for the next 5 years. You see where we stand today. These numbers will probably be updated tomorrow on Yahoo's site. That EPS is trailing 12 months, so that should change whenever they update things, and you'll have a new P ratio. But if it was going to go by the forward PE for Netflix, I believe off the top of my head, that was sitting at around 60. There's definitely an opportunity here for Netflix, particularly if we see any kind of pullback on the price that is any way substantial, that you could get in on a stock with a plus 20% growth rate. Double check that number because I'm doing that off the top of my head. But you could get in on something as far as valuation that's trading a lot cheaper than some other things out there. All right, so that's Netflix earnings, but a couple things to think about here that we can try to do some correlation, right? So Netflix net subscriber additions were slower than expected in Q3. So there's a couple places where that type of trajectory could spill over. And in my mind, obviously Disney Plus is the first one because they also have Hulu and ESPN Plus. So there is a chance that we could see weaker than expected streaming numbers in Disney Plus. Not to mention the weird thing about Disney and Disney Plus is they don't have a comp cycle yet, right? They haven't been live for a full year. So whatever they projected to summertime is going to be a wild guess. And they got the hardest year in the world to project it, right? So whatever they thought was going to happen in summer, they're guessing, plus they're guessing on top of pandemic behavior. So we got to watch out on Disney earnings. There could be a little bit of bad news or good news, quite frankly. But if it follows Netflix, it's going to come in definitely substantially less than we saw in the first 2 quarters. And it could be under their initial expectations in terms of new user additions. With Disney in particular, we know that the reopening of the parks hasn't really materialized in the way that they thought it would. So to me, this is setting up as a mixed bag for Disney earnings. I'm not sure exactly when their next one is, but that could be one of the reasons that they've announced sort of a reorganization that focuses on streaming. Sometimes companies do that to kind of distract you, right? You come out with a bad earnings, but you have this new shiny object, which is the new structure of the company. But we could be going into some weakness for Disney, and yet what they're going to come out of it and say is like, tough times. Here's what's going on. This is how we're shifting and changing the company, which is exactly what you would hope that they would do. Another potential takeaway from these Netflix earnings that could influence other companies would be potentially YouTube. If revenues were less than expected on the YouTube front, then that could ding Google a little bit. Again, nobody's going out of business, right? Nobody's suffering for the foreseeable future, but this is just kind of me putting two and two together to guess what might be happening ahead. All right, guys, hope you enjoyed this quick earnings recap of Netflix. Don't forget to give me a like and subscribe. We'll see you on the next video.